Good evening to you all. This is Dr. Let me try to go back here. The process of making decisions after a trade has been entered according to your trading plan. It includes monitoring the trade, managing risk, taking profits, exiting, losing trades, and following your plan. So, in the recent videos, I talked about trade management and maybe to ask you why trade management matters. So many traders think a perfect entry guarantees success. The reality is good entries can still become losing trades. Average entries can sometimes become profitable. So the difference lies on how you manage the two positions, and your discipline matters a lot in the two situations. So the moment you enter, we are going to start to talk about important key things. The moment you enter, many traders relax after entering, but professional traders ask, has anything changed? Is my trade idea still valid? Has the market structure changed? Is the higher time frame narrative intact? So those are the things you have to ask yourself before taking any particular trade. And the other thing that you have to do, folks, you have to trust your analysis. So after entering, avoid checking that every candle, for instance, like maybe you expect more retracements, temporary consolidation, minor liquidity movements. So has my overall idea changed, or is it normal market behavior? market moves rapidly, that means it's going to sweep liquidity. It is targeting liquidity at a certain level. So when market moves rapidly, this is where now the trader now becomes too excited and to find out that the trade is going to reverse, and that's where he gets frustrated. So partial session. So, and I also told you folks, you have to look for a session that matters. Ask yourself, is London ending? Is New York opening? Has volatility changed? So session transitions may affect how the market behaves. So you have to study a specific session and you stick to that session. So another thing you have to know is to make sure that you holding, losing trade, and chasing profits, chasing early profits. So entering after me seeing a fair value gap on the 15-minute time frame. So when should you consider trade invalidation? So when you've not seen those things that I've talked about. So if I've not seen slippage of liquidity, charge, and also fair value gap, or maybe another block, I'm not entering. So am I seeing my target conditions? Am I seeing a higher time frame order block? Am I seeing a higher time frame fair value gap? Am I seeing a higher time frame fair value gap, or relatively equal highs? Yes. So you also have to put your session rules. Yeah, what are you expecting in a session that you've chose to be your specific one, that the only session that you're trading? So all those things, you have to set your rules. And also another thing that you have to be knowing is to review your process. Every time you're taking a trade, you have to review the process that you always follow. So I also give the process that we always follow on this channel. So another thing that is more important is to journal your trades. Never forget that, journal your trades. So today we've learned one of the most overlooked part of trading, and this is what we call trade management. So I've tried to take you through thoughts. So just wait for our video 7, video 8. The best traders don't rely on memory to improve. They collect data, study their decision, and learn from every trade. In our next lesson, we will build a professional ICT trading journal and performance